Hello, and welcome to PremiumBytes, where we shine a light on the unsung world of insurance technology leaders. I am Sudhar Krishnamachary, one of your co-hosts, and with Samir Ahmed, our other co-host, we're here to have meaningful conversations about the evolving technology landscape inside the insurance industry. Let's acknowledge it. Being an insurance firm CIO or Chief Information Officer is one of the toughest leadership roles in today's world. You've got a risk-averse mindset baked into the very fabric of the industry, a legacy estate that must complement the modern tech, and a talent crisis from both the retiring side and next-gen recruiting side. And then you got the slower pace of innovation. We see it because we're right there in the trenches with you as consultants day in and day out. Our mission is to deep dive, have conversations that carry substance, offer practical insights, and help you validate and navigate the relevant challenges of being an effective CIO in the insurance sector. So thank you for joining us on this adventure. Let's jump right into our next conversation.
Hey, Samir.
Hey, Sudhar. How's it going?
Good. Good to be back on the circuit with our next episode. I know we did a bunch of cloud episodes. We planned several episodes, but then I guess we had to stop. But really excited to be back.
Yeah, same here. Absolutely right. Episode 14, 15 on cloud. We had intended to do a few more, but personal things came up. So last couple months we had to take a break from PremiumBytes here. But look, we're in Q4, and as we've been doing at the change of quarter, look back at interesting news stories and events that we've attended in the previous quarter. So today, let's do that. Of course, we're in the midst of hurricane season, so I don't know that we can talk about insurance without acknowledging the difficulties various people, parts of the country have had with hurricanes, particularly Helene and Milton, hit parts of Florida really badly 2 weeks apart, less than 2 weeks apart.
Yeah, definitely. I think we should take a moment to pray for those people whose life were affected, and some of these are beyond our control, some are within our control. So we'll do everything we can to help. But also an opportunity to take a step back and acknowledge that, not just the hurricanes, but a lot of natural as well as man-made events across the world are also causing suffering and stuff like that. So maybe we'll take a moment to also acknowledge that and do our part to help.
Yeah, absolutely. It's easy to hyper-focus on local, happenings, but absolutely. Broader global items are there too.
Awesome. So with that, I think you've been a little bit more active than I am in the conference circuit. So let's just touch for our audience benefit, what's teed up in Q4.
Yeah, so we won't really talk about any specific events because Q3 was all summer time frame and it's typically very slow. I certainly didn't attend anything. But this quarter, there's quite a few events, right? There's the LIMRA annual conference. There's the NAMIC and APCIA traditional industry events, ITC Vegas, Guidewire Connection, so on. A number of events happening this quarter. We'll attend them. Some of them we've attended and maybe provide report next quarter on them as a group rather than just piecemealing them here.
Sure. And if anyone from the audience, if you attend or attended any of these events and would like to share with us, offline or live, feel free to reach out to us. Or if you choose to skip one of these for a particular reason, we'd love to hear from you as well on why you're attending some and not attending others. So we welcome that interaction.
Yeah, for sure. But speaking of sort of noteworthy news stories, so there's quite a few, right? It's always tough to decide what to highlight in our podcast here. But as we've always done, we'll cover some things related to PNC, some things related to life, something broadly applicable to insurance as well. And then, we kind of meander through a few related things that maybe don't neatly fit into these boxes.
Sure.
But I
But
think I will get us started on the first one. So let's talk about this. It's really a blog post. Home insurance is a really big problem, written by this lady, Kyla Scanlon. And the story, right, it comes not from a traditional insurance publication or anything like that,
that's
but it
yeah.
was fascinating read, which covers quite a bit of ground, actually. And the title, right, home insurance is a really big problem, but then it starts out with, discussing housing policy and home ownership challenges, what the supply side, challenges are, meaning, do we have enough homes? Short answer is no, we don't. Why not? So decent coverage of reasons behind that. She also covers a little bit of the demand side of things. Why are people not buying enough as many homes? Home insurance is expensive. Mortgages are expensive. Um, Prices of houses is too high, so it dampens demand. And then she covers all these things in more detail. Of course, you would expect that with all of this, she talks about solutions, and she does. But I was disappointed actually that the solutions. This is really it, right? Something about collaborative programs, something about, hey, we should have micro insurance products. Maybe legal reform is needed, but there's no real discussion on these.
Yeah,
Um,
although it's a tough one. It's easy to lay out all the problems, tough to solve them.
Yeah, definitely. But I chose to, highlight this piece because of three reasons. So, reason number one, right, is that being from within insurance, right, we I think all of us feel this. Insurers are made out to be the quote unquote bad guy, right? Insurers are out to make a buck. They don't really care. Jacking up rates, pulling out of markets, not really concerned with what impact it has on homeowners, so forth. And reality, right, is that, and I think in this article, this one point is made, which is worth a reminder that insurance, right, is not really a means to protect against hazards, right? Insurance does not do anything to change the fact that you will have hurricanes and floods and wildfire and hail and strong winds, so forth. Insurance merely dictates who pays for repair and replacement when the inevitable damage occurs.
Right.
And the second thing, right, that in this highlighted part is pointed out is that these events that are insurance is designed for events that are predictable but rare. They happen, but not frequently. Well, fires are happening more frequently than before. Hurricanes and floods are happening more frequently than before. So no surprise, right, that insurance is becoming
It will
more
continue to
expensive.
get worse in that
Yeah,
sense,
and it will
right?
only continue to get worse. So I think this is one reason why it's just important for us to be aware of this conversation, and we should be doing our part on educating the broader marketplace and consumers about the role of insurance. But then the second reason, which may be more appropriate for this audience of tech leaders in insurance, right, is that while this is all multifactorial, right, regulation has a role, and housing policy has a role, and finance, monetary policy has a role with interest rates, so forth. But technology also has a role.
I could even put the capitalistic economic incentives also as
Absolutely, absolutely, yeah.
yeah.
So speaking of that, right, what can insurers do, and where can technology help? Right, so we do, I think, better job than before about predicting, the tropical storms as they're forming, and we inform coastal residents about, hey, hurricanes coming, evacuation orders are put in place, so on. But we got to do the same thing with the winds in the plains, right? When these strong winds come in places like Iowa and Nebraska, or when the hurricane hits and moves inland and then causes water damage, not just the wind damage. Um, and we saw that with Helene, right? A vast
Yeah.
majority of destruction was inland, not
Yeah.
in coastal regions.
Although I think you're probably hitting on the point that Tampa perhaps was reasonably little prepared, perhaps than other cities across the world, which speaks to investing in some sort of tech-enabled infrastructure to kind of mitigate.
Yeah, yeah, absolutely. And then the use technology to identify structures that are not resilient enough, and could be made more resilient with simple adjustments, right? So
Yeah.
whether it's fire related, whether it's wind related, whether it's water flood related, there's an opportunity to leverage technology for this purpose. And I'm sure you've seen photographs of same place, two houses. One is reduced to rumbles, and the other is perfectly
Reasonably
fine,
okay,
still
right? Yeah.
standing. And what's different? One was built prior to updated codes, and the other one was built with all the resilience. Well, maybe not all, but reasonable resilience measures in place. So anyhow, right? Few places where technology can play a role, which I think is worth our audience paying attention to this space.
That's great. Which is a timely opener for the season with the hurricanes behind us.
Yeah, absolutely. And of course, this piece, right, is talking about home insurance, but here's the second story that I want to talk about: severe weather impacting collision repair and auto insurance. So,
Yeah.
this is a story in Insurance Journal based off of a report from CCC, right, the organization that handles a lot of auto
Claim data, I
repair
guess. Yeah.
networks and body shop, so forth. So they have this report called the Crash Course. They used to publish it annually. Now they're doing it quarterly. And a few key things right from this report. So hail-related auto claims rose 11.8% in 23 compared to they were 9% in 2020. And the cost of repairing hail-damaged vehicles has gone up 15%. And not only that, right, hail claims are more costly than other comprehensive claims. So then the report gets into, why is this? And again, nothing is simple, right? A single factor in our industry, right? So they talk about the fact that, repair costs are increasing. They talk about the fact that weather events are becoming more frequent, and they talk about people are driving more expensive cars, SUVs and EVs, electric vehicles, so forth. That it costs more to repair them. So the other factor that they point out is that there's net migration to geographies where weather events are more impactful and more frequent, places like Colorado and Texas and Florida. So again, right, just for purposes of our audience, I figured just highlight that the advantages that technology can bring, right, they are relevant here as well. Just as we talk about advanced notification for, reducing uh, fatalities at a minimum, even if not, damages from weather. Would it not be nice if auto insurers can tell their policyholders that, hey, a hailstorm is predicted in your area, uh, reduce your
Yeah,
driving,
prevent.
make sure your cars are parked in covered places, so on.
Yeah, or even recommend that they don't take their vehicles out at least on certain periods, uh, you know, and things like that. Which I think generally for a human population we're doing it. I don't know how much we're doing it for moving vehicles and stuff like that. Um, but I think that's a fair point that interesting use of technology could be used to not only protect people, but also the assets around these people, right?
Yeah, absolutely. So uh, I think
That's
the
great.
the stats are there, right? And the opportunity space is open. Who can do something first? I think that's the interesting piece to pay attention to.
Awesome. I think that's a get segue into uh, what is happening in the streets, and at least in one state, there are neighborhoods that are now getting a high tech upgrade. So as the article kind of plays games with the words, that getting the green light, right? High tech upgrades coming soon to the roads. Um, the article is referring to vehicles and roadside equipments like signals and stop signs and stoplights, transmitting real-time information and exchanging real-time information amongst these vehicles and devices and stations. Um, and it's all embedded in a broad term called vehicle to everything V2X. I'm learning about it as part of this podcast research. So fascinating that U.S. Department of Transportation launched a blueprint and shared that blueprint with government entities and private entities on how to deploy this technology and how to kind of collaborate and work together on this. So I thought it was important to highlight to the technology leaders in our audience, especially those working on auto and auto related products and services. This is important for them to keep an eye on. I think the overall objective is obviously for human and vehicle safety and property damage prevention, etc. But as I can also imagine, like, what does it really mean for auto insurers when every vehicle talks to every vehicle, or every vehicle talks to the signals and devices on the streets and highways? And, does that make everybody safer? That means, like, what's the intent of insurance? And you already alluded to this fact that, accidents are going to happen, natural or man-made. So kind of opens the door for a discussion on is a lot of this emerging new way of using technology to make everything safer, is that going to add new dimensions of pain point for insurers in pricing or claims or whatnot? So I'm sure you have a point of view, so I'll let you react to it.
Yeah, yeah. I mean, it is definitely a fascinating space. We've got some attention to this space as autonomous driving is increasing. I think you've also touched on this in other forums, right? That how does the liability for when the inevitable accident occurs, uh, where does it fall, right? Is it with the signal, that had a problem, and neither of the cars that got into an accident are at fault? Or is it with one of the vehicle manufacturers? Or is it with the sensor manufacturer that didn't detect something? Or is it with the software that took the signal from the sensor and didn't do the right thing? Or is it with the driver that at the last moment said switch from autonomous mode to human mode in the car? So this kind of,
Or the data that is sitting on the dashboard that monitors your eyes and say that your eye was not on the street, or your hands were not on the steering wheel, or you had a fake device touching the steering wheel while you were doing something else. Like, so it kind of like opens up a plethora of new fascinating things for us to solve for with technology and people. So
yeah. So absolutely, I think a lot is yet to unfold in this space. But at the same time, I think while we can imagine these kinds of futures, reality is still that if you look at National Highway Transportation Safety Authority data, uh, overwhelming miles driven in this country per year are conventional. So there's sort of a long transition
road
before.
to one a long road to autonomous, but a long road for vehicle to vehicle communication, and how all of that is going to play out. But nevertheless, I think audience should look out. I think if you scroll down, I think you highlighted the V2X piece in this article, so that'll be interesting
Yeah.
for others to do further reading on.
Absolutely, yeah, and like with many things of this nature, right? This public-private partnership, I think, will emerge as well. It's great that some kind of standard is coming out, or at least a blueprint. Hopefully, a standard will follow on how the connected cars and devices and sensors and signals and roads should, communicate.
Which leads us to an interesting article next on data. Now that every device, every asset in public and private domains are sending data to everybody else, and insurers are, obviously one of the stakeholders who generate as well as consume, probably consume more than they generate data. So this article, as the title reads, I think it's also written by a gentleman who's a consultant for the insurance space, is questioning if data is an expense or an asset. And I thought it was a little bit fascinating. And it being an asset in insurance is a given. Data has always been the oil of the insurance industry from day one. So there's no policy without data. There's no claim without data. So insurance exists because of data and for data. But there's a bit of a provocative accusation that majority of insurers are kind of acting like landlords, holding data, increasing their cost on the expense sheet, but not necessarily driving net new growth with data. And the author is using the Atomic Habits book, and this notion of just using only motions as part of building new habits, but motions don't build new habits, actions build new habits. So using the data to do something, whether it's a better user experience or new product or whatnot, will yield more for the insurers. But what prompted this to be surfaced for this audience is that I'm guessing some of the folks in our audience are offended by the fact that they're not hoarders, and that they are actually, leaders in the space, leveraging data and technology for full good use in products and services. But there may be some who feel like, yes, I'm stuck and that there are different challenges to acknowledge in consuming this data. So hopefully that's helpful. And Samir, I think there is a point to be made on either side of that provocative question.
Yeah. I think this is one of those things where we've talked about this before on our episodes, right? That what other business can lay a better claim to being the OG of predictive analytics, right? Than insurance. So, as you made the comment just now, right? There is no insurance without leveraging data, without looking at trends and statistics and predicting likelihood of rare events, so on. But at the same time, I think this dichotomy is also there that insurers are collecting more and more data as part of their operations. And how much do they actually adjust based on the data they collect? It's an interesting thought. I think like a lot of things, you'll find a distribution. That is my experience working with insurers, that most of them have more data that they manage. They pay for storage and backup and moving data from here to there. But they're not doing a lot with most of it. They're doing some things with some of it. So,
yeah, in that sense, treating data as an oil or a gold, I think, is probably a false metaphor, because it implies that you can directly consume as soon as you steal it. Because there's this YouTube on this picture on this screen about the Salesforce ad from a recent TV placement that makes fun
yeah,
of data being like a gold. I don't know. It is gold in some ways, but it's not also not gold, as in, you cannot just take it and, trade it for something. So,
yeah. So I do think there's more mileage to be gained out of data that insurers already have. More, and I think that's there should be more attention to that. My humble opinion, than chasing after, hey, what's the next data source I should
exactly.
incorporate? Well,
Exactly.
what are we doing with what we have already? Have we exhausted what we can get from it? Or forget exhausting, but have we gained even the 80% that we can get out of it with 20% of the effort, as they say?
Yeah. But it is a
So,
hard problem. I don't want to trivialize, and I don't want to pretend like it's easy to take advantage of it. A lot of this data is complex data, and again, once again, the unsung world of insurance technology executives, because you're going to have to deal with this. So, which
absolutely.
I think interestingly leads us to a next article, also for insurers who are extracting value from technology and data. But there's two dimensions of this article that what got me interested in the article was this article that Samir is sharing right now, which is insurers struggle to extract value from technology. So not a huge surprise, but still surprise. But a little bit of a negative tone to it. So I will leave it up to the audience to chase this article on risk and insurance to make their own informed opinion. It was based on a Bain report. But what I thought was fascinating was the Bain report itself. And so, Samir, we can pivot to the Bain research. And this is a recent research, so it's worth paying attention to. And the summary of the whole article, or the premise, is that 5 to 10%, or only 5 to 10% of the carriers are consistently capturing value from their data and technology investments. And that, majority of them, others have not necessarily realized. But for those who the 5 to 10%, they are certainly realizing values across, four major business drivers. And so what I thought will be worthwhile for our audience is to highlight and shine a light on, perhaps how they compare to their peers. And hopefully you can read on these four dimensions. The first one is, how much they're investing in data and analytics capabilities, how much they're investing in modern software development capabilities, And then third one is around cloud adoption and the plethora of capabilities around cloud. And then the last but not the least is the percentage of their IT investment relative to their operating expenses. So the Bain article kind of gives you this data point. So if you are a CIO, CTO, CEO in the insurance company, this gives you a fantastic baseline for you to compare for both life and P&C. But I think more important is the second chart. So Samir, if you scroll down, um, it shows, okay, I may feel like I'm the CIO of whatever, right? New York Life, and I feel like I'm a leader, but what does it mean to be a leader? I think this sheds a light on if you are a leader in the life or P&T space. The article shows that you are seeing a lift in terms of business metrics on premium growth and net promoter score and claim ratios and et cetera. So I think this is a good baseline as well for leaders to compare themselves against their peers, and consistently the leaders are yielding positive results. And so, as we've always said in our past episodes, and a general theme of Premium Bytes podcast is that, leveraging technology, continuously modernizing and tapping into the best of technology and data is always going to be putting you as a leader. Not everybody's going to be a leader, but if you are consistently doing it, you're going to see business results. So I'm curious, Samira, you have a point of view on your reactions to both tech leadership as well as business outcomes.
Yeah, I think, look, not surprisingly, this idea that technology is an important enabler for the business itself, right? I think this research is highlighting that, and it is absolutely showing evidence that the cohort that can be put into the category of technology leaders garners better insurance business outcomes. And I agree with your point that no matter when you look at the market, it will be a minority that will be considered leaders. Everybody else will be the rest of the pack, right? So these advantages are for the leaders. The question that we can ponder is it like a level of investment that brings these benefits, or is it in fact being a leader relative to the others that brings these advantages? And I would say that it stands to reason that it's the latter, because we're talking about average market share, we're talking about premium growth, we're talking about net promoter score, right? So these are all relative measures. So the benefit will only be if relative to others you are more advanced in your technology. Which, back to your point, right? Yes, we need to modernize, but not modernize because it's a destination, but modernize because it's a capability to continually keep modernizing and following the arc of technology innovation.
Right. Again, once again, it's easy said than done, but that's the beauty of this space, is that there's a lot to do for the savvy CIO who's willing to innovate, modernize, and make the best use of technology.
Yeah.
So hopefully this article will shed insight and allow them to benchmark themselves against their peer groups.
That's right. And you maybe alluded to it, right? That these advantages are both in life and P&C.
That's right.
All right.
The next one, I think you're taking a pull back and looking at something interesting at a general industry level that will have some implications on insurance, I guess.
Yeah. So let's zoom out of insurance for a moment. All right. So from Insurance Journal, the story from July, FTC is looking into the targeted pricing based on personal data. So it's interesting, right? Some of you may be paying attention to a lot of the activity that is happening from this particular administration and the FTC in particular compared to prior decades. Companies like Google and Apple and the AI space, right? It's coming under increasing scrutiny. So is personalized pricing, right? How are companies changing their prices based on personal data from consumers? FTC
Yeah.
is studying this. There's no action that they're taking at the moment, and they're not even looking at insurance companies, right? They've in this study looked at um,
Pretty wide
Mastercard, JP
spectrum
Morgan
of
Chase.
firms, right?
Yeah, and then companies like Accenture and McKinsey, and then some software firms, and really they're just focused on how are these companies informing their pricing based on consumer data like their location and their prior purchases and other personal data that they're gathering. So, of course, in the insurance space, right, we just talked about are we taking advantage of data? We can do more. We can look at more data sources, so on. So there's some balance here that insurers will have to strike between, where they go too far. Earlier on, we had shared the story that a lot of audience members will remember from New York Times talking about auto insurers, leveraging auto data from LexisNexis that came from the vehicle manufacturers. I think that we covered back in episode 8.
Yeah, and I
So,
think more interestingly in those articles, it was said that the driver presumably did not know that their data was being shared. So I think that's where the privacy or the fairness part of it was highlighted.
yeah, and that was from a consumer outcry and
Correct.
consumer advocacy kind of groups. So will FTC take notice of that and move the spotlight on insurers next? Stands to reason
Highly
that
likely.
they will. So just something to
And
be
again, we also
mindful
touched
of.
on this, right? The worst insurance is an insurance that is priced only for you, right? Then it is clearly priced for you to not get paid.
Yeah. I mean, pooling of risk, right, happens when there is a group, right, individually. Otherwise, everybody is pays for their own claims. So where is
Right.
the pooling of risk?
Correct.
Um, so
Awesome.
anyhow, right, I thought it was just useful to pay attention to. Um, and sort of in the same vein, right, I have the next story from Best Review, August 2024 edition. Tokenized life insurance policy debuts through blockchain. And this is from Infinio, a
And
digital
then we
firm.
should have a da 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 and an eye roll icon, if we are doing all these fancy YouTube short stuff around this.
Yeah, for sure. Uh, we touched on blockchain back in episode 12, right? That why has it laid a big goose egg? And here we are, right? This topic that never seems to go away, uh, highlighted in, no less publication like Best Review. And bold claims, right? After years of research, development, and execution, we are pleased to deliver what we believe to be the best tokenization use case of real world assets. This is unlocking not only global accessibility, but also efficiencies and cost savings for industry stakeholders at every point along the value chain. And as if that was not enough, they are working to build a robust secondary marketplace allowing tokenized policies to be transacted on a peer to peer basis, allowing people to securitize them and create new products backed by life insurance. This is something the market does not currently offer. So,
I think this is worth a significant level of debate and unpacking, and I'm sure a lot of people in the audience are violently reacting already with either a good set of questions or more like, I don't want to hear about this.
Yeah. I think it definitely raises more questions than we can answer here. Uh, for example, what does it mean to tokenize life insurance?
Right.
All these bold claims, but we're talking about only 9.4 million worth of policies were minted when right here they say the space is a $3 trillion space. So we're talking about like negligible, dent. Yet more bold claims like creating options in the market that don't currently exist. And then they go on to say, actually, we're not actually issuing life insurance. We're just providing a platform that utilizes blockchain. So it leaves you scratching your head, right? Well, what have you actually done? So we definitely should come
I
back to
think
this one as a
this will
deep
be a
dive.
fascinating intellectual lecture style where we can unpack everyone and of these statements and then spend at least 5 to 10 minutes on each one of them. So I've as much as I was like, what the hell is this article? I'm starting to get excited about like, okay, this could be a learning opportunity for everyone, even if we agree or don't agree with this particular news item.
Yeah, and even for us, right? We learn as we go here, right?
Right.
Dive deep into the topic, unpack it. We cover things that we didn't know about before.
Yeah.
So I think those are the main stories we had. I think it would be great to hear from all of you. What stories did you come across that we didn't touch upon topically? Please share them. Would love to benefit from what comes across your reading. And as we started
Yeah.
at the beginning, right, where we kind of are getting back into rhythm. So after the 2 month break here, we hope to get back to a normal cadence of episodes on a regular basis.
Yeah. Absolutely. Looking forward to increasing the pace of this and possibly uh, uh, doing more of these in the next few weeks. So look forward to seeing you all again in the next episode shortly. So thank you as always for your support and like us, promote us, engage with us, comment, and we'll see you next time.
Take care.
And that's a wrap for today's conversation on Premium Bytes, where we shine a light on the unsung world of insurance technology leaders. Thank you for joining us on this adventure and being part of our community. Don't forget to like, comment, subscribe, share, and follow us. Until next time, take care.